You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Welcome to the next episode of the AZREIA Show. My name is Mike Del Prete, Executive Director of the Arizona Real Estate Investors Association. Welcome. Today we're talking about no banks, no problem, creative financing strategies in today's market. And the reason I'm bringing this topic up because it's relevant to today's market and our monthly meeting March 9th at venue 8600. We have an expert panel about creative finance. Then March 14th and March 15th, we have a 2-day Creative Dealmakers Academy workshop that we're going to break down these strategies that we're going to talk about today. So if your deal only works when the bank says yes, you don't have a real estate investing strategy. We're in a market where interest rates are high, underwriting is tighter, buyers are more cautious, but the truth is deals are still happening every day. The difference, the investors closing them aren't relying on the bank. We're relying on creative real estate investing strategies. So why is creative financing trending right now? Well, there's higher interest rates. Sellers are stuck at 3%, right? They're like, hey, they have this equity. They don't want to move. If they do sell their house, they're going to have a higher payment than they do now. So they're kind of just staying where they're at. Buyers with the higher interest rates, it's less affordable, right? Sometimes it's cheaper to rent in certain neighborhoods than buy a home. So properties are sitting longer. Some banks are tightening their processes. So when markets shift, leverage shifts. And right now, leverage is moving back towards problem solvers, which is us, the real estate investor. So creative finance thrives when sellers need solutions more than top dollar, buyers need flexibility, and banks aren't the only option. So how can you use these tools? I always say we look for problems, not properties, right? So we got to be able to say, hey, if cash doesn't work, right? And it always does until it doesn't, pretty much. What other tools can you dive into the real estate investor toolbox and grab and solve some problems for these sellers? So what happens is if, let's just say your toilet broke and, you call the plumber, and so you're like, hey, plumber, my toilet's not working. Can you come over and fix it? Great. If they just came over with a plunger, do you think what's the likelihood of them fixing that toilet on the spot? No. They go back out to the truck. They have all their tools, all their parts, and they figure out what it is to fix that toilet bowl. So that's how you need to be as a real estate investor in this market. So let's touch on 3 core creative strategies. First one, which is pretty popular out there right now, as always, is subject to the existing mortgage. Now, one thing I want to also say, okay, is subject to, we're going to go over subject to, seller carryback, lease options, right? These are what we're going to focus on. Those are the 3. So now, going back to their tools. So what happens is a lot of marketers, investors, right, that sell education, they're very creative, right? They're businessmen. They take these topics and they spin them and they market them. And it's like the next new thing. They coin phrases. That's fine. It's great. They give out the information. Cool. But what just the perspective I just want to come from on that is these tools aren't for every deal, right? You're not just a sub-2 investor. You're not just a lease option investor. You need to no longer be a one-trick pony. You need to understand all the tools or have at least an idea of how they work or understand when it needs to be used. I never went in and said, I'm only doing lease options forever. I used it when the deal comes to the table and you're diagnosing the problem. That's when I go, okay, how do I mold myself around this deal with these strategies to solve the seller's problem? That's how I want you to use these, and that's what I encourage. So subject to, you buy the property and then you leave the existing loan in place. This works for sellers that are locked into low interest rates, buyers that can't get affordable financing, and great for cash flow. So the idea here is, you're gonna we always use the 100,000, right? In Phoenix, we know there's no houses at 100,000, so it's always like, hey, they owe 100,000 on their mortgage. Maybe they're going through some problems. They're going through foreclosure. They gave up on the house. It needs a lot of work, whatever it is, but it's worth 100,000, right? Worth 110,000, whatever you want to say. So you can't give a cash offer. So what you're gonna do is analyze the deal, understand it, and then you're gonna go, okay, $100,000 loan in place. It's worth 100,000. So the mortgage payment's $500. Oh, I could rent it out for $900. Cool. If I rent it out, the rent will cover the mortgage, property, PITI, expenses, whatever it may be, and I have some cash flow left over. That's the main idea. If it doesn't cash flow, you never want to lock in these deals that are negative cash flow and in hope for the long term. You're always buying upfront with cash flow. And yes, you can wholesale that structure. But the hard part about that is, who are you wholesaling it to? Are you underwriting them? Are they a good person that will take over this loan for the long term, right? So I always used it for myself. Okay. So Subject to is a great tool. I don't think it's to use forever. Me personally, I like to ultimately refi out of it and move on and get my own loan in place, and or bring in a partner or a private lender, and clear out that loan at some point. Because an attorney told me, he goes, right now, you are the hero. You're solving a problem. You're stopping someone from foreclosure. However, when that person gets the problems out of their life, maybe they move on, new family, new whatever it is, and they want to go get that new house or that new car, and this debt is on their property, or excuse me, this debt is on their profile, and it becomes an issue, you're the bad guy now. Okay. So think through all that. Just some things to think about. So understand the legal disclosures, due on sale clause, exit plan. That's what I'm saying. Understand how to do it right and correctly, and not for every deal. Okay. But it's a great tool to understand and have in the toolbox. Number 2, seller financing. Seller acts as the bank. Basically, and a lot of things I do with these terms, I never really say, hey, you to the seller. I don't always say, we're going to subject to your house, we're going to seller finance. No, I try to always dumb down my language, right? Because remember, these people are not in our business. So I always say things like, would you accept payments over time? Right? Oh, how does that work? Right? Think like that. So so they could become the bank. One thing I'll say, hey, Mr. Seller, you understand how to buy a house, right? You borrowed money from the bank. Well, I'm just asking you to become Bank of America, right? That's what I'm doing. So that's essentially what's happening here. So to keep it simple, if they own the house free and clear, they can then create a mortgage. But once again, 100,000, they own the house free and clear. Let's say the house, I'll even pay more for the house if I have time. This strategy I will do longer. Okay. So if they own it free and clear, let's say it's worth 100,000 and they want 100,000. They don't want a low cash offer. Okay. I'll give you 100,000, but it goes back to, how do we all win? Right? What I always put on the table is, rather than, when people think when it's negotiating, it's like, put your fists up, you or me, I win or you win, right? No. I say, hey, how can we both take the situation and win? So I say, I stand side by side with them, not face to face, side by side, and I say, look at this. Imagine there's a table here, and me and you just need to create a game plan together with our own pieces to create a winning strategy that you get what you want and I get what I want. And if we can't create a winning strategy on this blank canvas, we part as friends. Fair enough, right? Lowers the pressure, right? So let's put our brains together. For example, I did this in Sedona, Arizona. This was about 2 years ago. A wholesaler brought me a deal. They didn't know what to do with it, right? So they allowed me to come in and structure the deal. So the homeowner, or the person that owned the house, the parents had passed away 10 years ago. House has been vacant in Sedona, Arizona for 10 years. The brother lived in Tucson, sister lived in Flagstaff, and the brother was in charge of the estate. So I basically said, what do you want? In a perfect world, sitting on Santa Claus's lap, what do you want? I want $750,000. Okay. We looked at the house, easy, Sedona, you need $200,000 renovation. Broke down the numbers, cash offer $450, right? Oh, everyone's giving me that offer. I'll never do that. I'm not giving away the house. You guys know that story, right? So fair enough, but that's just realistic numbers. Starting at 750, if we were to resell it and working backwards, that's just where you end up roughly. All right, well, I guess we can't do nothing. I'll figure it out. Wait, hold on. Would you take payments over time? Right? What does that mean? Well, maybe I can get you the 750. I just need time to get it to you rather than tomorrow. And if I can go in there, fix it up, rent it out, and cash flow, that's my win. I'll pay you the 750 over time. Well, I want 750 and that's all I want. Okay. Do you need it now? No, I don't need it now. Well, I'm retiring in 6 years. I want it then. And I want to be able to retire, not worry about nothing. Okay. So I proposed 10-year, right? 750 purchase price, 10-year balloon. I needed the cash flow. Rents were $3,500 to $4,000. So I asked for a $2,000 payment, which equated to a 1.75 interest rate. They did want 20% down, which I normally hate to do the traditional 20% down, but I'm just giving and taking, right? So at the end of the day, long story short, we did a 6-year balloon, 750 purchase price, 6-year balloon, 1.75 interest rate, which in my PIT has like $2,100, and I did the 20% down. I now own the house, went in, renovated it, furnished it, made it an Airbnb, right? We're covering our mortgage and then some every month. And then at the end of 6 years, I'll owe him about $500,000 balloon. It's worth $1 million now. So in about 4 more years, I'm sure it's going to be that or more. Never know though, just assuming. So I'll easily be able to refi out of that, right? So that's what I'm talking about. You got to structure deals that will win for everybody. So now I have this place, a business. I can go to Sedona anytime I want, favorite place in the world, and enjoy the business, provide the Airbnb strategy, and I solved their problems. We all won just by going, let's look at the drawing board. Let's look at a blank piece of paper, right? That is the seller carryback strategy. You agree on price, you agree on terms, and you create the note. Yes, in the note, they do have a first lien position on the property. That is their protection. Everything went through a title company. I had the note and all the documents obviously recorded with the title. I have Westar as my loan servicing, so I pay Westar. Westar pays the seller of the house, okay? So that's seller financing. Now let's jump into lease options. What is a lease option? Control the property without owning it immediately. Why it works. Buyers unsure about market direction. Sellers are tired of managing the property. Lower upfront capital. That's great for newer investors learning to structure deals, people who want to control before ownership, right? We all heard Rockefeller, control everything, own nothing. You probably see the lease option strategy where you're basically lease with the option to buy. So there's 2 different contracts. You're doing a lease agreement, right? Once again, it all comes to cash flow. Can you cash flow this property? I think this is a good strategy for like 2-3 year plays, right? So it's like you can go into a seller, rent the property from them at a lower than market rent price. That's the whole point. They got to have some type of motivation or urgency to be away from to get away from the house. There's got to be a problem you solve, right? So now here, $1,000 rents, you lock it up at $600, right? You got to be able to rent it out at $600, right? You got to be able to cash flow on the front end with the seller, right? So you have a lease agreement with the seller, and then you have an option to buy the property in, let's say, 3 years. So if it's worth if you want to, whatever rate you want to do, today's rate, you lock in today's rate 3 years from now. Hopefully you get some appreciation, right? So now you're locking in the $600 payment at today's $100,000 price, where maybe in 3 years it's worth $125 or something, right? So then what you do is you go out and now you have the 2 contracts, lease, control the property, and you have an option, which is, seller must sell. Buyer doesn't have to buy, but that's not the game. But they now have to sell you the property in 3 years. You go out in the meantime, right, and you find a tenant buyer, right? Someone that's willing to pay market rents, right? Because they want to be a homeowner. They want to own the house. Maybe their credit's not good right now. They're just not in a position to buy at the moment, right? But you want to make sure that you have a service provider or someone or a loan officer coaching them and giving them a plan to get to that point. So in 3 years they can buy the house, right? So ultimately the idea is they're going to pay $1,000, maybe a little bit more premium, but they're going to pay market rents at $1,000, right? So now you have that spread, 600 to 1,000, and then they have an option to execute at 125 in 3 years or whatever it is. So you're going to make, and you get a down payment. So they're going to put a small $3,000 down payment. They're going to pay $1,000 a month, and they're going to buy it at 125, where you locked it up at $600 a month at $100,000, right? So you're just making the spread over those 3 years. So in 3 years, they buy the house with their loan officer, and everyone gets paid going down the line. So these are just 3 quick strategies. There's more out there. There's a few more, which we'll talk about at the monthly meeting and at the Creative Deal Makers training on March 14th and 15th. So let's talk about a little bit about who should and shouldn't do creative finance. Investors who understand contracts should, right? So you got to understand how to put these agreements together to protect yourself, or have an attorney or someone that's very experienced in these. You want to have the right paperwork. People willing to solve seller problems. You truly got to know what a good deal is. The numbers need to work where it gets them moving forward and it allows you to run your business. And it does take communication skills, right? You got to be able to articulate this, explain this, keep them updated, right? Between Westar and myself, I send a message to the owner every year. Everything's great. Thank you. Hope all is well. Just how can you communicate? Make sure you just can't be afraid to express what's going on in any way. You should not do it if you're just chasing no money down, although it does happen. I get, more stories where you could talk about that. You could do these things and enter properties with no money down. I've done it before, but that's not the end all be all. People avoiding education. I mean, if you're just, trying to get in and pay your bills the next month and you're just structuring these deals just to structure them so you can wholesale them and get an assignment fee. I think I should have pulled it up. In Florida, I guess someone structured a bunch of sub-2 deals and they're all getting foreclosed on. So, if you're new to this business and you structure a deal that doesn't cash flow or doesn't make sense, and then you assign that structured deal to an end person that's maybe new in the business and they don't even really know what they're buying, they're just excited to be in the business. It's just a bad formula. Anyone unwilling to consult professionals. Sometimes you got to pay for the professional to look it over, whether it's a coach or an attorney. Just pay the professional, get it done right, and understand everything. So don't avoid responsibility and structure smart deals. So I kind of went over I was going to go over a couple of scenarios, but I think the seller financing kind of gives you an idea how powerful these creative strategies work. So cash works until it doesn't. And that's when you need the lease options, the seller carrybacks, the subject twos. So as I wind down here, in tighter markets, the investors who win are the ones who understand the structure. If you're relying only on traditional loans, you're competing with everyone else. But when you understand subject to, seller finance, options, wraps, all that good stuff, you create deals where other people see dead deals. If you're getting tons of deals coming in or leads coming in, you're analyzing deals every day. Not everyone understands, especially with so many people getting into the business all the time. They have their blinders on. They only see one way, cash offer. You can look at other people's cash offers or deals or their pipelines and go into their that's literally what I used to do. I'd network with other wholesalers. I would go into their pipelines and look at their lead flow. And I would just say, what about this one? About this one? What's going on? I'll look at the problems and see how I could solve them. And I would generate deals in other people's pipelines because I understood these structures, right? So you can make more money. And inside the AZREIA online community, when you're a paid member, we're going to start going live. I have Brandon Simmons, a good friend, longtime investor here in town. He's going to be jumping in to the online community to run through more of these scenarios in depth, like a live Zoom call, but it's going to be in the community. So pay attention for an email, text. Just look out for that in the community. If you're not logged into the community, make sure you are. Once again, join AZREIA. We'd love to have you part of the membership to help you learn with our education, build relationships within our networking events. And obviously, we're always keeping you up to date with the market information from Tina Tambor, government affairs information. There was this big proposal in legislative season here right now that could have really wiped out real estate investing in the community in general. It's not passing, but the intention's there. So you got to stay up to date. You got to, we also got to voice out and protect our industry. So come to AZREIA's monthly meeting on the second Monday of every month. For this episode going into March 9th, it's the creative financing expert panel. And then make sure to why the discounted price is still available. The Creative Dealmakers Academy, all about creative financing, March 14th and March 15th. Make sure to register and be there. And I will see you at the next meeting. This is the wrap up of the AZREIA Show. I'm Mike Del Prete, signing out. Adios.
Passive, really I think this massive. Stable cash flow, lavish. Bought the finance for the masses. This 14% in manufactured housing. Really, all the deals I be doing is kinda hard to keep on counting. Not really. 10% for the year. It's clear this the new way. Little competition in my arena. Need a house cost arena strategy.
For 10 to 14% returns, invest today with Silvercrest Opportunity Fund.
10% passive, the checks I blind on with collateral.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Del Prete. We hope you enjoyed this episode. If you found this information valuable, head over to azreia.org and learn more about our community.